Hello there, I'm Dr. Stock, Doctor of Education, and I want to take a look at Tesla stock since Tesla released their earnings in the after hours in this video to see what exactly is happening with the price after hours compared to my expectation, and also take a look at their earnings compared to my projected earnings that I put out in my last video up on YouTube. And I also have further detail over at my Patreon. The link for the Patreon, by the way, is down in the description. I will be using the Moomoo app today. You can also find down in the description that link that by signing up and depositing your cash, you can get up to 15 free stocks. With that said, I do want to get right into the charts that we have here. And I said yesterday in my video that I thought that Tesla would fall on their earnings, and so far they did. Now, this video is being recorded before we get the earnings call. So we still want to listen to the earnings call, and we have to listen to what they have to say. And that could cause further volatility in the after hours when we watch that happen. That does happen at 5:30 p.m. Eastern time. Maybe you're watching this video after it took place. I plan on doing another video on the commentary from their earnings call, and we'll see what else happens with their price action. So let me jump over to my web browser. And I don't want to look at Moomoo again, but I want you to look at Moomoo again. Let me click here into, there we go. Got it. So on their investor relations page, and you can totally get here yourself, by the way, if you just search in Google Tesla investor relations, that'll bring you here. And what I'm using is their shareholder deck is what we'll be looking at. If you want to listen to the Q&A, you can also click that link, and then you can also see what questions will be asked during that Q&A as well. So here's the countdown that we got. So you got it timestamped for this video. It is just shy of 5 p.m. Eastern time as I record. And here are the numbers in their investor deck when we look at this. So we won't be going through the whole thing. So we got 11.4% operating margin. You'll see that I had that overshot when you look at my earnings. If you go back to the previous video on that, you'll see that 2.7 billion gap operating income. I think I had that closer to, let me see here. I have it right here. So operating income that I had was 4.1 billion, and they came in at 2.7 billion. So that was a little bit light, and they do have that in their investor deck, the limitations that they had and why they fell short of it. So for me, I had their operating margin closer to 18%. They came in 11.4. Some of my other numbers still did work out well. So we got 2.5 billion gap net income. For me, I had it at 2.7 billion. So just a small overshoot that we had there. And let me see. 2.9 billion non-GAAP. I didn't have that, but if you look at their years for GAAP versus non-GAAP, especially at their, you can see when you look at their earnings per share that usually within 10 to 11 cents per share, 10 to 12 cents per share is usually what you come in at. So for me, I had it at about 70 cents per share. So for me, I would have said like 80 to 82% cents per share. And then when you look at non-GAAP, they came in at 85 cents per share. So let's scroll down and we'll take a look at the financial summary that they have here. All right, so for the categories here, total automotive revenues, I had this at 19.3-ish. They came in at 19.9, so almost 20 billion for automotive. I had this coming in at just over 23 and change, and they came at 23.3. So that's 23 billion, 23.3 billion that they have. So I missed that by about 1.5%. So that not too bad there. And then total GAAP gross margin, they came in at 19.3. I had it at 18.6. Still pleased with that. Operating margin is where we really did have that miss over what I thought that we would have. And then moving down from there, net income attributable to stockholders actually had a small overshoot in there as well. And then coming back here to what we have for, there we go. There's the GAAP EPS that we have, the 73, and the headline number, which is non-GAAP of 85 cents. And that's a learning moment for me that for Tesla that report non-GAAP. So I will also, in my next iteration, I'll actually report both of them. It's not too much harder once you have one to get the other one. And I said it's normally 10 to 12 cents. There's 12 cents difference. There's 11 cents, 10 cents, 12 cents difference, 12 cents difference. So I could take whatever I get for one and just turn it into the other one for non-GAAP. And that should be good for at least approximation, even if it is abstracted from the underlying metrics that they have. So I will say that there's not a huge surprise here for me. I did say that I was bearish in the short term. I really do want to hear their commentary and see their forward guidance to hear more about this. So if you look at the next page in their investor deck, they go over revenue, they go over profitability, and they have the pluses and the minuses. So you can look at that as well. We'll zoom in a little bit more so we can see it better on the screen. So we know that the vehicle deliveries grew. That we knew that since April the 2nd when that came out, and then growth in other parts of the business. That one specifically, their storage was a nice place for them to grow as well. And so we can also see that in their earnings. And then let me see, reduced average selling price, I believe is ASP when we're looking at that. And then excluding foreign exchange impact. So that's against other currencies. And you can see that that was a decent loss for them as well. So things affecting their profitability, they have growth in vehicle deliveries. Excellent. And it says, despite margin headwind from underutilization of new factories. So as the new factories come online and we start taking advantage of economy to scale, that should be something that bolsters up their margins moving forward from where they're at right now. So then gross profit in energy business as well as services and others. And then reduced raw material, commodity, logistics. So raw material cost, by the way, that is something that I think is going to continue to moderate for them. So that should also fill out their margins and support their margins over time, which is good because they absolutely need to keep costs down, especially if they need to keep, if we have weak demand for auto in general, EV being in it, or the EVs being part of the auto sector, that could also cause weak demand for Tesla as well. So we do want to see those commodity prices and material prices continue to come down. Logistics prices also coming down. I think that's really going to help out. And then let me see, cost of production ramp from the 4680s. So that should get better over time. And then lower credit revenue. And let me see what we have over here. So the cash, yeah, they're burning through their cash at a decent rate there, but they say that there's nothing to worry about. So I think that'll be a big question looking at their cash flow, because I think they're down to about $400 million in free cash flow as of this quarter. So that's something to keep a watch as well. So here they give production and delivery news. Not something that we didn't know a whole lot about before. Here's what I really think you should pay attention to as well. Solar deployed, that came in kind of 40% year over year. Good. It did drop sequentially though. When we look at that, we see about 30% missing, actually, well, 33% missing off of that when we look at it quarter over quarter. And for storage deployed, we see some very healthy growth there as for their mega packs. And so that's good as well because they're working on economy of scale there and they really are building out. So it is good to see that rampant growth. And global vehicle inventory, this is also noteworthy. This is most definitely going to come up in earnings, that they have a growing supply of vehicles, that they're now up to a 15-day supply. And when you look across the quarters, 3-day supply, 4-day supply, 8-day supply, 13-day supply, 15-day supply, people are going to question, is that going to be a continuing issue moving forward from where they're at, that we're going to see more and more Teslas just sitting around as inventory. So that is something that absolutely should come up in their earnings, and I'd be surprised if it didn't come up in their earnings. Let me see. And then market share by region, US and Canada still number one. China being overtaken, kind of running parallel with what we have for Europe, but Europe is winning out above their Tesla market share. We do see China inflecting upward a little bit, whereas for Europe, we see that flattening out a little bit. So we'll see as the year plays out if that continues to inflect upward and we still kind of get the sort of S-curve growth, which isn't totally perfect. You can see some flattening out in the different regions at different points in time. It is possible with all the new factories coming online that we really start to see these curves start to inflect back up again and show us that we're really in the middle of the S-curve, not at the beginning where we have low ramp or at the end where we have low growth as well. But Tesla is still a very much maturing company. So I very much highly expect from all the numbers that I've done, and if you've watched my other videos, I most definitely have that research out there and it's out there for you to see. And I do have the files available over at my Patreon, like I said, if you're interested. I don't want to go on too long with this, so let me see. Autopilot and full self-driving, want to keep hearing more about that. Miles driven, we most definitely want to keep seeing the exponential growth, and we should see that for FSD. That's only going to improve it over the time as AI matures. And I believe it's hardware 4 that they just released. I need to read up more on that one, but that includes better resolution cameras that make the other ones look like it was fuzzy in the first place. So that should be something that also improves the AIs being able to just flat out see better and be better at identifying the different obstacles and road conditions that are set before all the Tesla EVs. Energy storage, they talk about the mega factory coming online or development in Shanghai, I should say, and they continue to ramp for the one that they have in Lathrop, California, and you can see the exponential growth that they're experiencing there as well. And that Q1 has been very, very good for them in terms of energy storage, and that matches up with their other numbers. And then we can see more about their energy storage, our services, and other gross margin that they have as well. And that after that, for the outlook, this is kind of nice too, and they'll speak more about this. Continuing the 50% compound annual growth rate target we began in early 2021. And then let me see, it does mention production though. We want to make sure that production turns into deliveries, because it's one thing to produce the vehicles, it's another one entirely to have the demand enough to actually take those vehicles off their hand, because otherwise they're sitting around and, well, rusting out, to use a car phrase. And we definitely don't want that, because that's going to drag on Tesla if the vehicles remain undelivered. So we want to see that production growth, but we also want to see delivery growth continue with it. And I crunched those numbers as well as what the delivery should look like. And we'll see how that ratio changes over time. Hopefully it's something that narrows, that they're not sitting around on a lot of inventory, because like I said, that can drag on the business and take away from the profitability. And that's not something that we're looking for in Tesla. We want to continue to see that growth story going for those of us who are bullish on Tesla. They do say they have sufficient liquidity for the long-term roadmap. Good. Profit. We continue to execute on innovations to reduce cost of manufacturing operations. I would say they've done quite a bit to actually keep profit going as well as they have so far, especially in light of all the price cuts that they've done to their EVs. So excellent Cybertruck, get that on the road, and we'll see how demand goes for that as well. They say later this year for that. Right now, it's still, as of this investor deck, says that it's in the tooling phase, and then Tesla Semi is still coming in. Same thing for Tesla Roadster, and the robo taxis, they say, are on the horizon. I don't remember the exact wording that they used for that. I actually just passed it. There we go. In development. There we go. I don't know why I couldn't think of that phrase, but there it is. So I do want to take just another quick look at the charts, and then I will let you guys go from there. So back to Moo. So this is the 5-day, and where we're currently sitting right now is about a 6% drop, $174 per share. And actually that lines up really well. Oh, there we go. I'll actually show you this one. Lines up really well with the support lines that I have drawn on here. So a few things to notice. Let's zoom in towards this end. There we go. So here's where I had drawn the narrowing, and you can see we broke down below that to not only as a low and a high price just barely touching this lower line that we kind of broke down below that trend. Now we're all the way down. Let me see, 175. So we actually come down to about where this is right now. So even though we opened at about 179 and then closed at, what was our closing price here? Put that right there. I'll read off the exact value. 180.59 is where we closed for the day. Now we're down to this support line about 175, and we're still about 23 minutes out from the earnings call. So that's really going to possibly impact what we hear. And I have this major support that we have down at 165. I can't imagine that they're going to say anything that drops us down below that in the earnings call. So it is worthwhile to listen to. So let me hide those, because I know they can be distracting. There we go. I just got some moving averages up here. We are down below the 50-day, and we have that acting as really nice resistance for us. I say nice because it's sort of predictable resistance as we watch that take place. It has flattened and actually started turning a little bit negative, so it's like we're dropping back down, that we're continuing downward trend on Tesla stock. So we'll have to see, like I said, where the forward guidance takes us. If it is a time that we start to see strength come back to the stock price, or for those of us who are bullish, buying opportunities come into the stock price. For people who are bearish, time to short the stock, wherever it is that you find yourself. And none of this is financial advice, by the way. I did place a put option on Tesla for their earnings because I figured that they wouldn't be stellar earnings right now. That's working out well for me. It's working out in my favor. Strike price of 175, and so it should be in the money or near the money right now. And we'll see when the market opens tomorrow. If the market bias is there in my favor that we open up red tomorrow, I will be selling that option as quickly as possible before the market flips back around on me. So I definitely don't want to sit down around on it long, because it's not a thing where I want the time decay to really chew into my profitability. So let's move on from there. So that's Tesla, and that's their earnings, and I can't wait to listen to their earnings call and see what it is that they have to say. And I hope that we get some really exciting news from that earnings call and a great forward guidance. It is noteworthy to point out that these highs that we saw from Tesla, we haven't really broken back to new highs in a very, very long time. The last time that we did was actually right back here, coming back to February the 9th. Actually, well, we broke new highs a little bit earlier than that. It looks like February 3rd, but really in a clear and significant way, I would say February 9th, where we broke these previous two little highs that we had here. However, the next high failed to break that. And so it's like all these major ones that we have before, we didn't really clear. So this Moo app that we have here, I really, really do enjoy using it. It is very powerful and incredible, and it is cross-platform, so you can get access to it on your smartphone devices as well, whether Android or iOS. And remember, using the link down in the description, you get up to 15 free stocks. by depositing $100 more to get 5 free stocks. $1,000 more gets you 15 free stocks, and either one of them gets you free access to their premium courses to up your investing and trading game. And there's also still a financial literacy US paper trading competition going on where you can win up to $1,500 cash coupon into your trading account and 1 month of Bazinga Pro for free. Thank you very much for watching this video. If you liked it, I hope you hit that like button. If you would like to see more of my content, well, then I hope you subscribe. And I also hope that you ring that notification bell to see anytime that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.